where we are looking at the big story of the morning, and that is the fact that we are going to pay less for petrol at the pump this month. Special dropping by more than 50 fils a litre to less than 4 dirhams. Very pleased to be joined now by the energy expert Matt Stanley, who is the Middle East Partnerships lead at the data company Kpler. Matt, good morning. Thanks for joining us.
Good morning.
Do you want to put this move in context for us? What's behind it?
Well, I mean, it was always inherently what the UAE retail petrol prices here, they follow where global oil markets they head. And it's been an extremely volatile time. You know, oil markets, always are extremely volatile inherently. But this year especially, we've seen day ranges $5 to $6 a barrel sometimes on crude oil. $12 we were at the start of the year when the Russian-Ukraine issues started. It's settled down a bit now. But what's happened is crude oil has been pretty steady. We've been in sort of around the $100 range because we've been stuck between this push and pull of supply issues versus demand and, you know, recessionary headwinds, etc. But refining margins, which is obviously you put a barrel of crude oil into a refinery and then whatever the grade of crude is, you could get diesel or gasoline out. And it trades on a refining margin, trades on a differential to crude. And that's really come off because there's so much more pressure on demand. Not within this region in the Middle East, we're fairly sheltered from it because we benefit from a high oil price, but global refining margins have collapsed. And that has meant that global gasoline prices themselves have come off. And that's why we saw the 20% decrease we saw for August.
Which is very welcome here. And in the US, we have seen petrol prices come down as well. But historically, we're still quite high, aren't we?
Yes. Yes, we are. You're right. I mean, look, it's all relative. You know, could you say that the price of oil is cheap right now compared to when it was $139? It's about putting any asset class, whether that's, I don't like Bitcoin, you know that. But if you talk about any asset class, it's all relative compared to where you see market value. And the issue is, and I made this clear to you earlier on in the year when we've spoken, the biggest concern the market has got is in the EU is going to be gas. And gas last year, we saw the structure move up in the whole energy complex because, look, if the price of gas goes up because there's worry about supply, then you need secondary feedstocks for power generation. Now, diesel in Europe is the biggest industrial fuel. And that may mean for power generation because you can't get the gas. It may mean for tractors or haulage, whatever it might be. There is a big issue when it's coming to supply, whether we want to face it or not. Now, because, you know, who needs heating their homes when it's 36 degrees and you can't get an air conditioning system? You don't think about it when it's hot. But the market in Europe especially needs to be prepared. That's why we're in this push and pull market, and that's why inherently oil prices are so strong. And I don't see that rhetoric changing, but, you know, maybe someone will come to save the day. Let's wait and see.
Oh, you mentioned the push and pull market. Which is the bigger fear, the lack of supply or the concerns about global growth and recession?
I would say it's neither of those, to be honest. They both are very good points, and they both make a difference. The biggest issue the energy market faces is lack of investment. And that has really been what we've seen over the last decade, something like that. You know, we have, I say we're in this region, again, I refer back to it. Fundamentally, we know His Excellency Al Masrahi is keen to invest in fossil fuels. We know we've got this carbon neutral agenda, which we have to acknowledge and plan. But right now we need fossil fuels. And in Europe and the US, they have not invested in energy. There's been no investment in the energy sector, put it that way. No, there's one new refinery globally that's going to come online this year, and that will be the Al Zour refinery in Kuwait. And, you know, you're looking at Europe, it's still 2.5 million barrels a down of refining capacity when COVID happened, and that hasn't been restarted. That's the biggest issue to me, Brandy. It's appetite for energy investment, which I think is a little ignorant of the world to ignore when we all rely on it every single day of our lives.
Well, we've got OPEC Plus meeting on Wednesday, and it's going to be their first meeting in quite a while without a clear plan, without the whole bring back the barrels that were taken out from COVID quotas. What will they be weighing up, and what could we see?
Well, I think as well, it's very sad about the late Dr. Barkindo, passing away. Was the OPEC Secretary General. This would have been his. I think this would have been his. He wouldn't have been the Secretary General in this meeting. So the Kuwaiti guy. So I think, will there be a change in dynamic when it comes to the group? I don't think so. I think that the group has done extraordinarily well over the last 3 years to balance markets compared to where they see demand and supply. The political side, Russia, but they still see Russia as being a big part of the group. I think that's a sensible move, because Russia really had and do help with the supply-demand balance. Look, if it was above $100 a barrel, and okay, everyone's putting all these grim and moody outlooks for the rest of the year. Look, things seem to be okay. I know inflation's high, but everyone's making money. Like, everyone you speak to is making a lot of money. I don't see why people are so moody. It's quite annoying. But the second half of the year will be an interesting one when it comes to Q3. We were a third of the way through Q3. It seems fine to me. So what we're going to do, kick that can down the road until Q4. If you're OPEC, you sit back and you say, okay, fine, well, let's wait for those grim outlooks that everyone's putting in place to come to some kind of reality. But inherently, the group maintain course. That's. I don't see their need to do any different. They haven't done any different recently, and I don't see why that should change.
Well, the oil companies are making money, Matt. Exxon, Chevron, Shell, etc. They're reporting amazing profits, but people in their homes are looking at energy prices going up, and they're looking at the costs that they're putting in the cars, which is probably why they are a little bit, as you put it in a technical term, moody. Do you think we're going to see more windfall taxes on oil companies? There's a lot of political pressure there, isn't there, for those around the world, like Joe Biden, who's calling on those companies to bring prices down and increase the amount they're refining?
Yeah, good luck with that, Joe, because his policy is flawed fundamentally. And what does he do? He's going to go. He went to Saudi, and obviously, no one really knows. Did he go and see the Crown Prince and ask for more oil, beg for more oil? I don't think he would have done, but he's sort of semi-reliant on the OPEC are going to do more. But look, your point about windfall taxes and oil companies are making money. No one, when they were losing so much money 2 years ago in a pandemic, I didn't see many headlines that were saying, "Oh, poor oil companies, look at them, they're not making any money." And now that they're making money, everyone's like, "Well, you're being so greedy. Can we have some of it back, please?" So it's all relative. The policies in Europe are certainly going to be tested by each government within the bloc and the UK as well, because this is an unprecedented situation. Do you subsidise energy prices that puts pressure on fiscal budgets? I don't know. Maybe, but it's something that we all need in Europe, and that's gas supply. What do European governments do? They have to probably subsidise this. They haven't got a choice. But do I think it's the greed of the oil companies? No, I don't. I just think that they follow where market dynamics are, and they make hay while the sun shines. And that certainly has been the first half of the year. ADNOC have done especially well, and Aramco here. It's been tremendous. And I think that a lot of people will be tested second half of the year in terms of leadance and guidership. What happens to make sure that people are heated and that people have energy security.
Matt Stanley is the Middle East Partnerships leads at Kpler, speaking to us this morning on the back of that drop in fuel prices here in the UAE. Thank you for your time.
Dubai Eye 103.8.
Join the conversation.